Hello everyone, welcome to ESS BIZTOOLS offering virtual CFO services. I'm Peter Towers, Managing Director of ESS BIZTOOLS. I hope you're having a wonderful day. If you have any questions during the webinar, can you please type your question into your computer and send it through to me, and I will attempt to answer your questions later in the webinar. If you think of some questions later on, you might be watching this recording later on. Can you send me an email then, please, and I will get back to you. peter@essbiztools.com.au. Creating the strategy for a proper accounting involvement with your client. What we're looking at today is the virtual Chief Financial Officer services. I think they're important because small, medium-sized accounting firms and larger firms, of course, can play a real role in helping SME clients to run better businesses. Financial forecasting comprises, first of all, making sure that you and your team have a clear understanding of how this business operates. We call that the business of business. It's very important. You need to remember that traditionally, for most of your clients, you probably literally start with a completed set of financial accounts. You're looking at the profit and loss account, the balance sheet, preparing a tax return, preparing tax estimates. But to undertake the Chief Financial Officer role, to prepare budgets, cash flow forecasts, projected balance sheets, I think you need to have a full understanding of how this business operates. So you need to go back to the very beginning. What happens relative to sourcing the raw materials that are used by this client? Where do they come from? Is there likely to be supply chain difficulties? Where are they stored? Is there deterioration? Is there theft? Is there pilferage? What happens? And work your way through a clear understanding. You might find that there's some team training needed for some of the client's team in better understanding key performance indicators. I think you'll find out a lot of information, actually. And it's a great way for some of your younger accounting team members to gain an appreciation of what really happens in a business. So that business of business understanding is very important. Market research is also a high priority item. Now, most of the accountants that I'm talking to will not have the resources in-house to prepare market research. So that's probably been outsourced to a separate marketing consultant, either by the client or you've organised that. Or the client may have a person in-house who is capable of preparing the market research. It's important that the documentation for budgets and cash flow forecasts, and therefore the projected balance sheets, are based on that market research. But that doesn't mean that you, as the virtual Chief Financial Officer, need to be a slave to that document. You need to make sure you clearly understand it, and that if there is questions, raise them now at the very beginning of the process, so that you're on the same page. I've seen some horrible results over the years where a market research has gone off and done their bit, and someone was doing the budgets and the cash flows did their bit, and the two were not linked. And that's a disaster, because whoever your client's using this final documentation for is going to ask questions, whether it's the bank, whether it's potential investors, whether it's a crowdsourced funding intermediary. The documents should be linked. We then need to go to the key drivers No, we don't. We go to the business planning first. My apologies. Business plans is also important. Now, I think you should be involved in the preparation of the business plan. It should originally start with the leadership team, but if you're performing the virtual CFO role, you will be a member of the leadership team. So the process is to get the ideas. And in the ESS material, which you've got access to, you've got full details of questionnaires for the business planning process. Go through those, please. Make sure you ask the questions so that you get a full understanding of what the vision is from the leadership team, because that is what you're trying to marry up, the vision from the leadership team, the market research. Hopefully the vision was also conveyed to the market researcher, and you're now identifying the key items that really relate to the financing of all this. The key drivers are the supporting schedules relating to day-to-day operations. Can be things like the budgets for each individual business unit, the cash flow forecasts, projected balance sheets, preferably prepared for 5 years and updated each year. This is the documentation that I'm suggesting you should be coordinating the preparation of. So let's just go back through a couple of those. Budgets for each individual business unit. I don't like the idea of a budget being prepared for a total company in one document, because normally there are business units. Your client might have a processing plan, a manufacturing operation. They may have a delivery work business whereby they've got their own trucks during their deliveries. They've got a workshop to service the vehicles. And they may have 3 or 4 retail outlets, and they've got an office. And they own the workshop and the office building, but they don't own a couple of the other buildings, and they don't own any of the retail shops. So you've got a situation there where for each of those individual operations, each of the individual shops, 4 shops, the processing plant, the manufacturing, they're all separate business units. Please treat them that way in the preparation of the budgets, because then it's a lot more convenient to be able to prepare key performance indicators on each of those operations, so that they're available then for the person who's the manager of that individual unit, whether it's a retail store or whether it's the processing manufacturing business or whether it's the workshop. Someone has got responsibility to manage that, and it's a courtesy to be able to give them their budget figures so they can see what they look like and know what they've got to measure up against, and the key performance indicators, so that they've got proper management involvement. Now, some SMEs, I know you'll find this doesn't operate this way, and the owner or the director might be wanting to put everything up against his chest and try to control what's being handed out to minor management personnel, might be their view. But your role, if your client's taken on the concept of a virtual CFO, I think it should be that you communicate with them and make them understand that it's very important that this information has to flow down through the organisation with proper training, of course, so that the business gets the benefit of this management success throughout the organisation. It doesn't all just come back to the CEO or the owner. It's spread over, in what I've outlined there, at least 7 or 8 different management positions, so that those people can really do their job. The cash flow forecast obviously brings into account the total business, unless there's some reason for preparing separate cash flow forecasts. I would do one just for the overall company. But obviously what's been happening in the key drivers has an effect on what's happening in the cash flow forecast. Because the key drivers will be feeding the information from the debtors ledger into cash received, from the creditors sub-accounts for payments being made and purchases and so on. So they all work together. Projected balance sheets is really an opportunity for you to be the financial storyteller, to be able to show your client what the results of their current investment decisions, research and development, team training, developing new products, what all that might look like in a few years' time. And to get to that finished product, they may have had to borrow more money, and they're now repaying it, or they may have issued shares through a crowdsourced funding equity raising. What's it all going to look like in 3, 4, 5 years' time in their balance sheet? What's the business going to be worth? So you can also undertake a business valuation each year to show them what the business is now being worth. And I think the initial projection should be 5 years hence, and then updated every year. This is definitely the formula that the American accounting industry is adopting. Let's work out a projection for 5 years' time. Give the client something they can really set their eyes on, and then help them implement it. Now, this is real accounting work. I don't think you're going to have any trouble with attraction and retention of team members if you're going through this process. The virtual CFO services could also include a monthly work program. In fact, I think it's vital. I think I should change the word could to should. The monthly work program is vital. We don't want to be just preparing a cash flow forecast and a projected balance sheet on their own and throwing them in the bottom drawer and forgetting them. These have got to be living documents. Bring them to life every month, in fact, every week. So what's in this, what I'm calling the monthly work program? It starts with the weekly performance reports. I think these should be prepared for all businesses. I was the CFO in a listed public company quite some years ago now, and we had hundreds of business units, retail shops, boning rooms. We were in the meat industry, 4 major meat works, but then a whole spin-off of other activities. Each one of them had their own profit and loss account, had their own manager, had their own budget. And each week, the local accountant in that area that we worked for, our area director or manager in that area, was responsible for preparing the weekly performance reports, which was a profitability report and key performance indicators that related to that particular business operation. Very important. These were reviewed by the local area director or area manager on a Tuesday, and were all then forwarded to head office where my team consolidated them so that I could sit down and have a review with the CEO on a Wednesday morning, no later than lunchtime, so that he knew exactly how things were going. Now, in lots of ways, that was a long time ago. We didn't have the benefit of today's technology. And I now know that large companies do all that on a Monday. So they know exactly how they went with the previous week. Think about it. I was in the meat industry. I didn't know anything about it when I started. That's why I had to learn that business of business. It was fascinating. But think about your client that's operating a butcher shop in a major shopping centre anywhere in Australia. And 30 metres away is a Woolworths department store, food store. And in there, of course, there's always a butcher shop, isn't there? The guy running the butcher shop in Woolworths knows by Monday morning, around lunchtime, I understand, the results of the previous week's trading up until Sunday. And the general manager of that store, there might be 40 or 45 departments in that store, he gets each of the results by late Monday afternoon. So that the butcher shop manager and the general manager of that Woolworths store are able to sit down and analyse their performance, look at the key performance indicators, make pricing changes and policy changes for the current trading. They've only missed one day. Monday's gone, but they're ready to go. What's happened with your client that's sitting 30 or 40 metres away in that shopping centre? Is he doing anything like this? Have they analysed their performance for the previous week? Do they know what their key performance indicators were? Have they got an indication of what changes should be made? Are they monitoring what's happened in the sale yards that week and understand the price rises that are coming through and making adjustments? Some of them do, of course, because they've got an accountant who's advising them that's gone through this process of implementing what I've been talking about, the weekly performance reports. I really recommend it. On a monthly basis, you should be making sure there's monthly financial accounts for each of the business units, not the company as a whole. You can consolidate it at the end if you wish, but on a monthly basis, my recommendation is for each individual business unit, each of those 4 stores that I referred to before, the retail stores, separate one for the manufacturing operation. Sure, you've got to implement transfer pricing between the various businesses. You can do that, that's been done. And then you can get the key performance indicators for the month for each of those business units. Now, this is starting to be real information because the key performance indicators should be compared so you know what they were last week, last month. And variations do stand out like the proverbial. There's no doubt about it. You can look at it and say, gee, gross profit percentage in this operation for week after week's been around 38, 39%. And this week it's 21%. Is there a mistake? It's the first thing. Or has there been a major problem in that business? The next part of the phase I'd be suggesting that you're involved in is the monthly board review meeting. This is another important concept under the virtual Chief Financial Officer service. The leadership team should be meeting each month, preferably facilitated by you, so that there can be a proper analysis of the financial performance for each of the business units. So they go through the monthly financial accounts and the KPIs. You could then brief the leadership team on the financial performance. And there's not only the profit and loss account and the KPIs, but it's also what's the current debtors, what's the debtors days outstanding, what's the creditors days outstanding, how much money is invested in inventory and work in progress as compared to budget, that type of overview. You can then give a cash flow forecast update. Give them the working capital position. I've already mentioned debtors days outstanding, stock on hand, the very important stock term rates, creditors we talked about, and then the bank position. What is the bank position? What is it forecast to be over the next month? Is there any need for urgent discussions with the bank? Whatever else you need to think about. Being on top of the business. Now, many of your clients have not been doing this. They've lived in this belief that they work for the year, submit their data to their accountants, and some months later you get back to them and tell them what their tax position is. That's not really running a business. And most businesses in 2022 need more than that. And with today's technology and communications, you're able to deliver an enhanced range of services. So what else comes into this role of being the virtual Chief Financial Officer? I've listed a few of them that you might like to think about. Research and development. Now, your client has to be a company to be able to claim the research and development tax offset. That doesn't mean that they necessarily have to be a company to undertake research and development activities, but it's always nice to be able to claim the research and development tax offset if what your client has undertaken is eligible. And because for the last, 12 years, the fact that the company may be trading at a loss through R&D activities is not an issue, because the tax office will refund the research and development offset calculation amount as a refund to the company if the company elects to receive it, because they're running at a loss. So research and development needs to be properly set up. We've got two supervising organisations, the tax office and Oz Industry. Oz Industry is to decide whether the project meets the definition of research and development, and that requires the checking that's gone on into prior art and how it's all documented, and the tax office is there to make sure that the money that is being claimed is able to be substantiated. Within the ESS BIZTOOLS advanced package and the financial forecasting package, there is a complete research and development documentation system that assists you to deliver this service. Buying a business. Many of you will be acting for clients who are wanting to buy businesses. That might be a role you need to be looking at, or selling a business. Succession planning is very important in every business. And succession planning is just not an issue for the CEO. It's an issue for every person, I think, because it's all about being able to upskill the team, the total team, progressively, so that when vacancies occur, hopefully you can fill them with people who already know the culture and the working processes of this particular business. They can be promoted to new positions. And corporate governance is a very big area, and you, with your training and your skills and the resources which you have available from ESS BIZTOOLS, should be able to be the mentor on corporate governance, both within the leadership team and other members of the leadership group within the client's organisation. If you're involved with the board of directors, you may also be able to have some input on corporate governance at the board of directors of the business. The other big issues are going to be the funding for the client. We've set up the systems that you've prepared, the budgets and cash flow forecasts, projected balance sheets. Part of that process may have identified that the business needs to have an injection of new money in 8 months' time because of a major capital expansion project or research and development activity that you now want to commercialise, the client does. So you could be looking at crowdsourced funding, equity raising. Company's turnover on a group basis, international basis, has to be under 25 million Australian dollars. Gross value of assets has to be under $25 million. A client can raise up to $5 million in a 12-month period, but they can repeat that up to $5 million in following years if they continue to meet those guidelines of under 25 million turnover. So it's well worth looking at. There are processes, and there has to be an appointment made of a crowdsourced funding intermediary, but we've covered all that in our system documents. Section 708 of the Corporations Act should never be forgotten. That's there. A company can raise up to $2 million from no more than 20 investors in a 12-month period. One of the key matters that you need to be continually aware of is that a private company can only have 50 shareholders. So the ability to be going to the market in a very private way to raise capital needs to always take into consideration how many current shareholders the company has, and to ensure you don't breach the 50 shareholder rule. Otherwise, you have to go to a venture capital type organisation to be able to raise capital. And don't forget, for a young company, and young is basically under 3 years of age, although there is some opportunities for companies up to 6 years of age to utilise the early stage innovation company capital raising. It's basically utilising Section 708 of the Corporations Act, but there are benefits for investors for investing in a early stage innovation company. So that can be a real inducement to investors to be interested in having discussions with a company which will qualify to be an early stage innovation company. So don't forget it. It's a great opportunity. Another key area is bank relationships. Over the years, you may have already been doing those discussions for a client. There's no doubt in my mind that if you're performing the role of a virtual CFO, you will probably have more involvement in talking to the bank. The Personal Property Securities Register should never be forgotten. I don't particularly like this legislation, but that's of no interest to you, is it? It's the law. We have to work with the law, and it's very important that your clients understand how this legislation works and the benefit that they can earn by registering various customers and other facets of their business on this register. We run a whole webinar on the Personal Property Securities Register. In fact, we will be doing so later this year so that you have a clear understanding. You also have all the material that we've written on Personal Property Securities Register within the system. And there's always the request going to come from the CEO to do a deep dive into the business's performance. This might be to implement an incentive scheme. It might be to determine whether the business is ready and organised in such a way that it could merge with someone else or take over another business and want to move forward from there. Deep dive into the business can be an interesting challenge to understand, but it's all part of the process of having this deeper knowledge of what is really happening in your client's business. So if you want to know more on all this, please contact me, 1-800-232-088, and we'll set up a time to have a discussion to see what else you could be doing to make sure you're getting full value from your subscription to ESS BIZTOOLS. Our next education webinar is on the 16th of November, when we're going to take this discussion a little bit further of looking at part of the role of a virtual CFO to give you a clear understanding of how I think you can be involved. We're going to be looking more at the more advanced services, looking at utilising the Plan Guru software, which we have available as part of the package for the financial forecasting. But you may already have a favourite budget cash flow program that you use, and you can use it quite well. with the advanced package, where we put all of our material. The extra material that's available in the financial forecasting package basically relates to the Plan Guru software and to the training in the use of the Plan Guru software that is delivered by Paul Barnaby from Beyond Accounting Technologies. Paul is a very experienced chartered accountant who has devoted the last 20 years of his career to all things to do with predictive accounting, budgets, cash flow forecasts, projected balance sheets. So thank you very much for joining us on this webinar today. I don't see that I've got any questions. I hope that means I've answered all your questions. But if you're watching this at a later time, more convenient to you, and you have questions, please send me an email, peter@essbiztools.com.au, and I will get back to you. Thank you very much for your support of ESS BizTools and ESS BizGrants. Stay safe. Have a great day. Goodbye. And I look forward to hearing from you if you do have any questions or comments or suggestions as to how we present this material to you. Goodbye.